Hello, I'm Finola Burke from RaaS, and today we're focused on vehicle subscription business, Carly Holdings, ASX ticker CL8. And joining me to talk on Carly Holdings is CEO Chris Noone. Thanks for joining me, Chris.
Great to be here. Thanks, Finola.
Carly's just reported an 83% increase in subscription revenue for the fourth quarter of FY23 against Y22's fourth quarter, and a 12% increase in Q3, which is an acceleration on the Q3 numbers. And your average monthly subscription revenue has also increased to 212,000 from 189,000 in the March quarter. Is this the momentum that you've been expecting from the business, Chris?
We actually think we could have got a lot more in that quarter. We had a fairly slow start to the quarter. There are a lot of public holidays and also school holidays in April, so lots of distractions for people, a few things going on with the budget and RBA as well. So we found that people were pretty much distracted in April. They came back in May and subscription really started to pick up in June. So we see that we've got great momentum coming into the current quarter, which really started earlier within the month of June. So we think, it was a good month. We would have liked to have done better, but we're really motoring in the current quarter.
And subscription vehicle utilisation rates are now at 84%, which is a little below the 88% that you reported in the March quarter. How much of that is due to timing and bringing new vehicles on?
Some of that was due to the weakness I mentioned in April, but the majority of it was because we were bringing on a number of new vehicles. We're drawing down funds from the $10 million asset finance facility we announced towards the end of March. Those vehicles came in relatively late in the quarter, and they generally take a couple of weeks for their first subscription. So that's why the utilisation fell down a little bit, and also why we had a little bit of a softer quarter than we otherwise would have expected.
And Chris, you've continued to drive down costs in the business, with advertising and marketing costs down 19% against a year ago, and product manufacturing costs down 16% on the June 2022 quarter. Is there more to come out of the business, or do you feel that you've got the cost base at optimum level right now?
I think on the cost per unit basis, we're pretty happy with where we are. We'd like to continue at that level. The absolute cost for marketing will increase because we're an expanding business. We will be adding hundreds of cars to the business, and we will need to do that marketing. And also, we have referral relationships where we pay commissions as well. So we'll see those costs increasing in proportion to the revenue that's coming into the business. We'll also see some product and manufacturing costs increasing because we're buying more cars as well. We're paying registration, so they will go up. But once again, on a per unit basis, we're pretty happy with where we are. We will still look for efficiencies, but we think that will continue pretty much on the same vein.
Now, you've given us a little bit of a sense of how things are looking going into FY24, but do you see any shift in trading conditions? Is the demand still there for subscription vehicles, and how are EVs playing in that space as well?
We're absolutely still seeing a lot of demand. The vehicles that we've received recently, we're getting very good utilisation out of them. There's a lot more interest in EVs now, and we see ourselves as the try before you buy option for people and businesses considering EVs. We're also about to recruit a corporate sales team as well, so that we can move into the corporate and government market. We already get quite a few referrals from our second largest shareholder, SG Fleet, who are dominant in that space, but we also want to have our direct business in the corporate and government and not-for-profit market as well. And we see that that's another big opportunity, which is very untapped for our business.
Well, thank you, Chris, for joining me today. I'm looking forward to catching up with you through the course of this financial year to check on Carly Holdings' progress.
Thanks very much.